Welcome to this week's Middle Class Investor. This is Seth Martin. Thank you for coming in this week and viewing our YouTube channel. We're looking at the S&P 500 here. This is a very long chart going back to the lows in 2011, and of course you can see these lines here, like this one, and here where the price has been narrowing for some time, and then over the last year or so we've had this kind of a rolling overlook. Last week the market was very strong. In fact, the market's been very strong for the last, 10 weeks, and we're in a pretty congested area. This area across here is commonly referred to as a congestion zone. And the reason is because there's just a lot of buying and selling that takes place in this area. And it takes a lot of buying pressure to push through a congestion zone, especially one that's lasted this long. So likely, again, we're talking in terms of probability, but likely we're getting very close to the end of this move, and we should see some sort of move down. Even if the market is to go up from here, it would likely do so after a pullback. It's not likely to do it from this. It's not likely to launch higher from this exact point. We're likely to get some sort of pullback down, into this area maybe, and then maybe a launch up. But we've still got the workings of a downtrend. We have to respect that, and just in general too, the risk reward is not that great. If I go, we've talked about this before, but if the market moved higher from here, I don't know, maybe it makes another 3 to 5%, 6% even. But if it goes lower from here, it's likely to push down into this area here without much resistance. The next big support area is down here where this blue box is. So maybe you have a move that lasts several months into this area, a small bounce, and then down, kind of like what we had in oil. But that's just conjecture. We don't really know what the future holds. So all we can do is look at the price action. And what we can say about it now is what basically is what I just said, is that we're chewing through a congestion zone, or attempting to, and there is a probability that the market could go higher, and there's also a probability the market could go lower. So the question is just, how do you do it? That's why I look in terms of risk reward. At these levels, me personally, I'm not in the market long. I'm either sitting on the sidelines or waiting to take a position short, but not long, because there's just not enough reward to risk in the particular market location the market's currently in. All right, let's look at so real quick. Let's look at the volatility index. If I can get that to come up. There we go. So volatility's been low, but notice that it is kind of in an area where it's bounced before, right in this area. So volatility is likely to pick up a little bit. The question is will volatility pick up and break above this area here? And it's probably a 65% chance or so, 70% chance that's probably going to happen, but there's still a 30% chance that volatility could grind a little lower. So just let's keep an eye on that. It's important to remember two things. One, we do have a downtrend working, even though these are very large swings. It is still a downtrend. And the second thing to remember is the reward to risk is not great here. So there's a saying when the VIX is low, it's time to go. And the VIX is definitely low, so it's usually time not to be long in the market. We could look at the Wilshire. The Wilshire's something I've referred to before. Keeping in mind that this data right here is likely, that's probably bad data, but you can see the Wilshire is kind of respecting this downtrend line still, excluding this bad data here. And so the Wilshire's telling us that we're likely to probably see something like this next week. And if that's the case, then we're going to see some down move and continuation of trend, which is likely to take us to these past lows here in February. The other markets they're kind of like the U.S. markets. I mean, they've got these, we broke channel. If you look at this, is United Kingdom here. It broke channel, kind of try to retest, and then is sliding. So it's at this downtrend resistance. It's likely to grind around here and then roll over. Japan, same thing. It never quite made it up into this decision point area that we had drawn and rolled over and has been chopping its way down. Germany is probably the strongest one, but you can still see that there's a downtrend here. So I hate when that pops up. Let me stop that somewhere else. So you can see here, the downtrend line is it's definitely there. So this is kind of a global looking failure in the market. Although the U.S. market doesn't look like it's playing along just yet. It's still a downtrend, but it's a pretty strong uptrend in a downtrend. I mean, these are strong moves, and certainly you can make money on these moves. Just have to have the guts to go in there and buy at these support levels. Let's see, what else can we look at here? Let's look at the 10-year yield. This is the low back in 2012 on the 10-year yield, and we've been talking about this downtrend for a while, and it looks like it's not quite finished. So anytime you have a counter trend move, let me back out and I'll show. You get kind of this A, B, C thing happen, okay? So assuming this is A and this is B, then this is C here. So, or this could be A. This is part of the problem with doing this, is it's hard to see. Sometimes it could be A, B, C, and then this is what they call an X wave, and then you have an A, B, C. And that's probably as good as any explanation here, that this is also an A, B, C. And if so, you can kind of see here in this last move, which is very typical in Elliott type stuff, is you get this, the last C wave is a 5-wave move. So you can kind of see this 5-wave move here. You can also see that it's not complete, right? So here's 1, 2, 3, 4, 5. So if it's not complete, then we should expect this to come down into this area here below the 1.6% yield area. And you can see that would take out this previous low here, but at this point I'm willing to say that this low should hold, this 2012 low, and so you might see yields pull down into something that kind of chops its way down into here like so. But then this low would then be still higher than the 2012 low, and then we might see yields turn at that point. it's just, it's just a hypothesis. Sometimes when you're trading or you're investing, you need to try to pick a direction. You need to try to see what you can see, and then kind of make a hypothesis, and then trade that, and then have a place where you say, well, that hypothesis is wrong. So that's kind of what I'm looking at here. Let's look at oil. Oil, you can see its move its larger degree move is in the upward direction. So long term, very, very long term, oil is in a bull market. You can see here with this 1, 2, 3, 4, 5, and then right now we're in an intermediate type correction for oil that should take us down towards this line here around $15, $16, and maybe slightly lower than that. And obviously, if that's where we're headed, then you can see there's more downside to come. But currently, we're kind of thinking oil could come up into this area, at least this area, and potentially even a little higher into this area before we get this next move down. And or this could become a more complicated move. I mean, this sometimes happens, especially when stocks have a really strong move like this. You get this kind of like what's happened in the dollar, where you get a correction, and then you get another move, kind of a certain percentage of this move, and then you get a move down that's a certain percentage of this move, and then a move back up that's a certain percentage of this move, and so on and so forth. And that tends to go on until see A, B, C, you get D, and then E. Most of the time they're five waves. So then you finally get a kind of a thrust wave to a new low. So this is a way of working off all this bearishness, and this could literally take 2 years to go through a consolidation like this. And these are typically trend continuation patterns. So this is just a potential scenario that could play out in the market. You can see this, for example, in the Euro-US dollar. A very similar thing is happening in the Euro-US dollar. You have this huge move right here, right? And then the way you work off all that bullishness is in what's called a consolidation. So you get this kind of A, B, C move number one, and then there's it's kind of hard to see here, A, B, C move number two, and then A, B, C move number three, and so on and so forth. And so we can have a very similar situation, and you can see what I'm looking for to happen in gold. I think this is gold, is for it to break out of this consolidation and continue lower. But again, that could be, we could still be a year away from that on gold. Actually, this is the Euro-US dollar. Excuse me, Euro-US dollar. Gold went through a similar consolidation last year. A little bit less defined. It was kind of in this area right in here. Let me see if I can show you. Zoom in, because it is kind of interesting to see how these things happen over and over again. Let me zoom in. Let me get this part of the move. This is one of the reasons I thought it was over earlier. Now this one's a little bit more of a what's called a descending triangle. So you get a move up, and then a move down to the same line, and then you get another move up, and then you get another move down to basically the same line, and then eventually, in this case, it went up a little bit more again and then broke through. So it's just a different type of trend continuation pattern. That's why in this area I was saying these were pretty good prices for gold, but ultimately gold went even a little lower. So this continued even a little lower. It bounced up again and then lower again. So But initially I was calling for these lows in here, or excuse me, this low in here to be a pretty good low in gold, this low right here. But ultimately that did not play out. I mean, it was okay. It just the market went a little bit lower. So sometimes that happens. And that could happen in oil too, since we were talking about oil. The last thing to look at with these charts is maybe the dollar index. You know, the dollar index has been consolidating for some time. You almost get, you know, what we could have is a triangle, or what we could have is, and there's no way to really know, but you could have the dollar pull back here even a little lower and then bounce from here and start going up. But the dollar is definitely in some sort of longer term bull market, at least for the time being, because this is a pretty strong move here. I don't know. The dollar is a little bit more confusing to me. You know, it had this long move here, which it's not really. I mean, I guess it can be impulsive. So maybe this is an intermediate upturn in the dollar, and the dollar's going to lose value beyond here. You know, ultimately long term. But right now the dollar seems to be strengthening, which makes some sense. I mean, we're seeing some evidence of deflation. Starting to hear about. Sorry about that. The power just flickered. We're having some storms here where I live. But what was I saying about the dollar? Well, that really kind of startled me. All the lights flickered just now. But anyway, so the dollar, I think, will move up into this area, maybe somewhere in between these two areas, but then likely will roll over and go lower. So ultimately, long term, the dollar is going to lose more and more value. That's what's happened to the dollar ever since, you know, basically the creation of the Federal Reserve. So look for that to continue, but not without some deflationary, you know, strength in the dollar in the short term. All right, that that is about it for a couple of reasons. One, my platform disconnected when I lost the internet, and now I'm starting to get notices, and so I think this will be as good a place as any to end. You can follow me on Twitter at InvestorClass, and of course you can forward the YouTubes to friends and family members if you like. All right, everybody, thanks for joining me this week. Take care.